I'm Ben Reppond. Today is April 5th, 2023. Welcome to my YouTube broadcast. I'm going to cover the direction of the stock market, bond market, and the precious metals. And I think you'll find this interesting because I see a lot of things going on. There is a kind of a sea change, a change in direction in a number of areas, some positive, some negative. So I'll cover all of that. The purpose of this is to just be factual. So I don't present this with any bias of I think the market is going to go up, or I'm presenting an optimistic view or a pessimistic view. It's just designed to give you information so that you can see where things are going. And this is all as of last Friday through last Friday, March 31st. So I'll begin with this chart. This is the dashboard, which covers those 6 equity indexes plus long-term government bonds. And the yellow box shows the gain or loss from the previous week. The pink box shows the gain or loss from on a year-to-date basis. To the right of that are 4 columns of dots showing where these indexes are relative to their 20, 50, 100, and 200-day moving averages. If they're above, it's a green dot. If they're below, it's a red dot. I drew a white line underneath the S&P 500 because it is the most common benchmark, and you can see where it is relative to these other indexes. So these are ranked in the pink box. These are ranked from the highest performer to the lowest performer, top to bottom. So you can see the top performer is by far the NASDAQ 100, which is a gain of 20% plus for the year to date. At the bottom is the Dow Jones Industrial Average, which is approximately 0. Hasn't changed much from year end. And then the others are in between. And the green dots are much greater than they have been the previous week, and that week was greater than the week before that. So they are moving more in a positive direction. So the general tone of this report and of this particular dashboard is positive. Market moving in a positive direction. One thing that I saw last week, and I'm sorry I don't remember the source or the day, I think it was around Wednesday or Thursday of last week, where I read that the S&P 500, which to date through Friday is about a 7% gain, that number as of that day would have been 0 had it not been for 2 stocks. 2 out of 500 stocks moved that from 0 to 7%. Those 2 stocks are Apple and Meta, Facebook. 2 stocks accounted for that much of the S&P 500's gain, or all of the S&P 500's gain. So in other words, when you look beneath, you look at the 498 remaining stocks, pretty much flat on average. When we take the S&P 500 and break it apart into its individual sectors, the same sort of thing happened on the red dot, green dot. A lot more green dots than the previous week, and certainly more than the week before that. And if we went on back for that previous month, I think we had almost all reds at one point. But you can see that the sectors that are performing the best are technology and consumer discretionary. Those typically are the more influence. If the market is down, those are usually down the most. If the market is up, those are usually up the most. And then at the bottom are the more value-oriented indexes, which are healthcare, energy, and financials. And those were all negative on a year-to-date basis. For the last week, in the yellow box, you can see that all of them were positive, going from a gain of over 5% or 6% to a gain of 1.7%. This gives us, so in other words, the general tone of the market through last week is positive. So this shows, this is a 15-month chart, a weekly chart showing the movement of the S&P 500 over the previous 15 months. And I drew a black arrow to show you what looks to me like the general direction of the market from its low in October for the S&P 500 to its high in the end of last week. When I compare, I put on a relative strength basis the growth portion of the S&P 500, the growth stocks, compare that to the value portion. You can see the black arrow on the right, the lower right, is going in an upward direction. Generally speaking, for this year, growth has been more favored than value. If it goes up, that favors growth. If it goes down, it favors value. When I compare, again, relative strength, compare the Russell 2000 small cap index, the ETF is IWM, compare that to the denominator, which is SPY, small cap to large cap. If it goes up, that favors small cap. If it goes down, it favors large cap. So you can see, I put a black arrow at the end, you can see in the last few weeks the direction of the market. Small cap is definitely out of favor and has dropped a lot relative to large cap. So this basically is favoring large cap over small cap. Long-term government bond, an absolute chart. I show two arrows. One is this 18-month chart showing the red arrow shows the longer-term direction of the long-term government bond is down. However, since October, so this is almost 6 months, the general direction of the long-term government bond has recovered some and is going up. So that would show that generally speaking, it's favoring the influence of reducing rates, and rates have reduced a little bit. The impact of reducing rates and reducing bond yields is gradually pushing bonds, in this case long-term government bonds, pushing those up. The dollar continues to weaken. So it went to a high back in the fall, and then since that time has generally speaking been on a downward trajectory, and you can see that from the black arrow. Gold, represented by the ETF GLD, this is a 12-month chart, you can see has had a lot of strength since October, gone up quite a bit. And silver, a little bit different chart because silver pulled back further than gold did, but it has been pushing up more quickly in the past few weeks. Again, but the general direction, same thing, in an upward trajectory. When I compare numerator, silver, SLV, to gold, GLD, denominator, I put those on a relative strength chart. You can see that silver is pushing up much faster than gold is, represented by the black arrow. But prior to that, you can see that downward trajectory right before the black arrow, where gold was holding its value or going up, and silver in some cases was going down. They literally became disconnected, but that has corrected itself, and silver is doing what silver would typically do in a rising market, and that is outperform gold. Bitcoin continues to go up. This is from the beginning of 2023 or late 2022. Continues to rise. It dropped a lot and has now begun an upward trajectory. The volatility index, from all of the things you've been seeing, you go back to those dashboards especially, you could see a positive direction to the market and a positive direction to the S&P. So generally speaking. So as such, the volatility index, when it goes down, it's because there is less volatility in the market, less downward pressure on equities, and and vice versa. When it goes up, that shows an increase in risk in the market. And so my black line shows my arbitrary number at 24 and how far this is below the number 24 and moving downward. So again, that is a positive indicator for the market. Another positive indicator, one after another, is Asbury Research. As of Friday, all 6 of their indicators are now positive, showing that, again, as of that day, as of Friday, positive direction of the market. Now, this can change, but the general sentiment in the market is positive. When we look at comparing one type of asset to another, stocks versus bonds, stocks are more favored than bonds. High beta or higher volatility type stocks are more in favor than lower beta, lower volatility stocks. We saw that with consumer discretionary and technology being the leading sectors, and the value type sectors like healthcare and consumer staples being the lower beta. Large cap is favored over small cap. Again, we saw that. Broad market, the S&P 500, more favored than the blue chips, the Dow. Technology is more favored than the broad market. Growth is more favored than value. And the U.S. in all 3 categories, weekly, monthly, and quarterly, that's the last 3 columns, weekly, monthly, and quarterly, the U.S. is outperforming. I think this is the first time it's happened in quite a while, outperforming the emerging markets and developed markets. And long-term government bonds or long-term bonds are more favored than short-term bonds. And if we looked at this as of the end of 2022, what a different picture this is than we were seeing at that time. When we compare the U.S. versus the rest of the world, these are ETFs, SPY versus the ETFs in the second column for each of the countries or regions. Not a single time is the U.S. or another country strong enough over the other to get 3 green boxes, weekly, monthly, and quarterly. The only one that got some kind of recognition was France, which is monthly and quarterly. I thought I would put that on a relative strength chart so you could see France. The ETF is EWQ versus SPY. And you can see since sometime in September how strong France is relative to the U.S. Gold and silver. The gold price is, spot price is $19.76 per ounce, which is 0.3% below what it was the previous Friday. Silver is $24.17 spot price, which is 3.7% increase since a week ago Friday. So you can see this, we saw it in the relative strength chart, you can see this surging in silver over gold. Just a few weeks ago, the reverse was happening. Gold was going up at a faster rate than silver. So very interesting. The gold-silver ratio, gold numerator, silver denominator, is 82-1. Again, I think maybe about a month ago, we were seeing this as, I think it was 91-1. So it's been dropping. Why is it dropping? Silver prices are going up. but anything over 40 to 1 favors the buying of silver. In other words, silver is considered to be a better value if this is over 40, in my opinion, over 40 to 1. The further below 40 it is, the more it favors gold. Further below 40. And a monster box, 500 rounds of pure silver, 0.999% silver. A monster box today is $14,140. This is up sharply over the last week and the week before that. You can see why, because you saw the price of silver going up so much. This is $4.25 per ounce over spot. Now, this is not every retailer. I got this information from my son Preston because he's in that business and these are his prices. But I give it to you because I'm in favor of buying local and buying from brick and mortar, not buying over the internet, but buying from a local retailer if at all possible. So this gives you a benchmark to say that that's what his prices are, $4.25 for a generic 1 ounce round. Do you remember what it was last week if you watched this? $2.70 over. So when I got this from him, I said, are you talking about bullion, generic? He said, yeah, prices are up a lot. Wow, what a move in 1 week. And of course, the spot price of silver is up. So that relates to, in a monster box, $28.28 per round. If you bought only a tube, container, small container of 20 rounds, that 2028 goes to 2078. So there's a discount by going up to the 500 rounds. Thank you for watching. If you have questions or comments, leave them in the comment section below and I will try to answer them. Thank you.